So good morning to you, Megan. Thanks for joining us as always, and happy Monday. Shake Shack's an interesting one because this is one of the few businesses that is able to, even though it's in the restaurant space, able to somewhat fulfill its regular orders using some of these delivery companies and order ahead options. But is it enough to offset what would be regular business for them?
Yeah, whenever we're listening for Shake Shack, we're listening for people who are, getting Shake Shack to go now, or ordering from Shake Shack or using a delivery app, like you said. And what's interesting is when we look at this quarter that just ended, we know that demand was significantly down, especially in March, but it was already on a bit of a downward trajectory even prior to that. So when we look at this quarter's what they're about to report compared with the same quarter a year ago, we're seeing about it's down about 22% year over year. But one bright spot that you'll see on this chart, these are delivery or to-go specific mentions for Shake Shack. And what's interesting is you'll note that this uptick didn't really start happening until April. And what's going on here is that prior to this, Shake Shack had an exclusive delivery partnership with Grubhub. And they recently, I think on their last report, it was kind of a botched rollout, if you will. They learned that customers didn't want to have to download another app. If they were already loyal to DoorDash or Postmates or whatever they were using, they didn't want to have to now download Grubhub and upload all of their information. If they weren't already using it, they would just pick the next best thing. And so what Shake Shack did is they opened up these delivery partnerships. So now they're on multiple apps, and you can see that this really helped drive these delivery purchases. This really helped to, bring consumers back to the Shake Shack table, even in these times of social distance. So what that rate is that you're looking at, that's about, for the last 90 days, about a 48% increase year over year. So I think that that's definitely a good move that Shake Shack did to open up their delivery universe possibilities.
Now that's interesting, Megan. I mean, we're looking for some reason, you know, fast food companies are all open, right? They're all still doing business. They're not doing sit down business. They're only doing carry out and pick up and delivery business like that. So how do we deal with a company? You look at a stock like Shake Shack, and they're a small company. They're still quite small. They've got very small float in terms of open shares in their stock, similar to like Chipotle in terms of how small they are. But it's hard to how do we make you painted one picture where they're clearly declining, but they may have applied a tourniquet to declining numbers by expanding their world. Is that the way we should look at this? They were getting worse, now they're getting better?
From an earnings perspective, a lot of times when we come on here, it's like, we're looking at things and it may come across as neutral. But in this case, we're actually, we're leaning bearish on Shake Shack just because we know in the quarter that is already ended, that's already complete, the demand was down significantly, about 22% year over year. I think the company has already tipped their hand a bit and admitted, yes, that same store sales, it was significantly impacted by COVID and how consumer spending has changed because of that. Looking forward, I think that there is I would say a glimmer of hope in the fact that they are opening up these delivery apps that they're partnering with. So I think that that's definitely a move in the right direction, but they're still pacing down 22% year over year. You can see that PI, this is, the purchase intent mentions charted on that green line, and you can see that that's still down significantly from last year. So I would say that, whenever we look at Shake Shack, this isn't a company like a Chipotle that has this robust delivery platform already in place that's, utilizing data and collecting info and targeting consumers and building up ways to connect with the customer. I don't think Shake Shack's there yet. However, I think it is a positive move for the company that they are expanding they're expanding their delivery universe. They're allowing more people to shop there, and you can kind of see a little bit of an uptick on the very right of that green line, and that's kind of what's driving that increase, or people are now able to start getting Shake Shack deliveries. But this is something that's just happened in the last 2 to 3 weeks. So I think a lot still remains to be seen for if the company will actually right the ship.
And so, Megan, that leads me to my question, which is more in regards to about 6 months ago or so when we saw this stock peak out at 105. And I'm looking at your purchase intent mentions as well, and it looks as though they were dropping off at the same time. Do you have any insight into why that might be? Is it a lack of them not going to new markets, so there's not as much excitement around it? Is there trend shifts away from this style of a meal, whether it be, a cheeseburger and a shake, fast food in general? Or is there like a sentiment shift? Is there a decrease in the overall satisfaction with the quality of the product that you guys are seeing? Is there anything that sticks out as to what led to that decline?
From a consumer happiness perspective, that's pretty stable. And I don't think necessarily that consumers are turning away from this type of dining establishment. I think that there is something to do with, new store openings. I know even into last summer, they were, rapidly expanding into different markets. And we definitely saw that consumer demand uptick as they went to new places and as people were trying it and, coming to Shake Shack for the first time. I think that that's kind of subsided a little bit. And that's why we've seen, or the biggest thing that we can qualitatively say from our data into why we see that a bit of a purchase intent decline is just this lack of newness, a lack or a slowing of expansion into new markets. And what you can see here on this chart, this is the quarterly purchase intent compare. So the 2 quarters I have highlighted, that's quarter one, that's what they're about to report. And you can see that it's down about 22% year over year. There is a slight quarter over quarter increase that you see that from these, I think, new delivery mentions are kind of driving, but it's still down year over year. So I think that, going into earnings, we're definitely looking at this with a bearish lens, but the bright spot is that they're expanding their delivery universe.
And Kevin, as we bring this back to the stock, I'm looking at the last 2 earnings releases. Both were met with a down move post earnings. So one that the street hasn't been satisfied with, at least over the last couple of quarters. And it is kind of a murky picture, though. To Megan's point, obviously, with these delivery relationships expanding now, that seems to paint, a brighter spot for the current situation. But if you're in the camp to believe that things are going to be closer to normal in a more, earlier, timeline than others, then that isn't necessarily going to be a great story for them forever in the long term. As more and more of those competitive businesses start to reopen their doors, there's going to be more and more options again for the consumer to find. So there's a lot to unpack here. A stock that was 105, now 50, but traded all the way down to 30 at the lowest points throughout the sell-off. So Kevin, how do you unpack all this stuff?
Yeah, it's tricky. Let's face it. This is a tricky one, and I could list so many things. That stock went from 105 to 30. Now it's back up around $51. This isn't one of those $300 or $500 names that you're expecting a big move, but you're kind of expecting a big move, right? I mean, if they do it poorly, could this stock go back into the low 40s? Yeah, probably. If they're not executing, if what Megan's talking about is not hitting with customers. But that being said, if they get it right, as you know, Shake Shack is popular. So and the float on their company is tiny. So could this stock move on any really good news or any really bad news? Yeah, it could. So it's a little bit tricky here on how to play this. So I've got some ideas, that's for sure. But I mean, this is one that there's some chance for some real movement with the stock trading only $50 with a range of 103 to 30, basically in the last couple of months. Pretty crazy.
And Megan, back to your guys' lean or kind of your outlook on this one, at least in the near term, based off earnings. You said that you'd lean bearish if you were to choose. Obviously, easier to do that with the stock rallying $20 off the lows, giving you some room to work with, if you will. But I have a question too, just in general. Do people that you're following on whether it's Twitter, other social media platforms, and you're analyzing this sentiment, do they seem to give a pass to the restaurants and the companies that are producing these goods when they are through delivery? Because I would assume that the quality of a Shake Shack directly from Shake Shack has got to be fresher and better than if you're getting it delivered and it takes 30 minutes to get to your home. Do they take that out on the companies like Shake Shack, or is there a pass that's being given right now, given everything that's going on?
I think that, in the current situation, obviously people are just excited that they can still get, or they have an option to get Shake Shack because so many other things are limited. There's, an uptick in food deliveries across the board. So I think that this is a new normal and that expectations have kind of shifted. We're not seeing an impact on Shake Shack's consumer happiness. We're not seeing any significant reversal there. So as Kevin suggested, people really do like Shake Shack. They like to go to Shake Shack. They like to order Shake Shack. We're just seeing that less people are talking about ordering that year over year. And so that's kind of why we have more of a bearish lean into earnings. But, as Kevin said, there are so many different things that I think investors could latch onto whenever Shake Shack reports. Are they going to latch on to, decreased same source sales, or are they going to look for a bright spot for Shake Shack to say, you know what, since we opened up these delivery services, our delivery mentions or our delivery purchases have increased by X%. So, we are definitely seeing an uptick just in the last 2 weeks of people who are now utilizing these delivery services more and more. But I think that long term, that still remains to be proven, how sustainable this is.